And it's something that I think markets, economists, and others have been trying to digest, of course, over the last 4 years, and now in the still early days of the Biden administration, trying to understand what the stance will be between the two countries. But I think we are settling somewhat into a steady state, at least of understanding that tensions are going to persist. Competition will be there. While still some avenues of cooperation, but I think just trying to assess exactly what the economic and financial market impact is of that competition. And most eyes, I think, are on trade. Certainly haven't seen much action, really any action in the Biden administration with regards to trade, particularly on the tariffs that are set, because that was a key factor for China's rebound in the COVID, in the post-COVID era. And I think that's really the key policy aspect that has a macro impact. So a lot of eyes are on that, but so far we haven't seen much yet to give us an indication of what path the Biden administration is going to take.
Alex, there was some suggestion from one of our guests last week that due to inflationary fears globally, but primarily in the United States in this case, that the Biden administration may be more willing to remove tariffs because they see that as an additional tax on consumers, essentially. Is that something you're watching?
I think that's a good point, but I think you have to remember inflation isn't just a level price rise. It's when prices are continuing to rise, prices are continuing to accelerate, and tariffs really just brought a level price increase. But as long as we don't see a further increase in tariffs, it shouldn't really have that much of an impact on either direction from an inflation perspective. And if it were to be really bad, then you could see them potentially resorting to taking them off as a means of maybe lowering that price level. But we're not that concerned about inflation as it is. So I think our base case is that we don't expect inflation to go up. And then I think in line with that, we're not really looking at tariff removal as something that is on the table right now, particularly as it would be driven by inflation. Maybe other aspects, yes, but not from an inflationary perspective, no.
Okay. So, Alex, you sound like you've joined the chorus of people saying inflation's only transitory, don't worry too much about it. But what about in China specifically on the industrial production side? As Sam was pointing out, there is an attempt here to keep it from trickling down into the consumer. Do you think that will be successful, or do these price pressures raise some concerns about profitability at China corporates?
Yes, we certainly have. We've always, I think, been part of the chorus that it's transitory, particularly in the U.S. I think in China's case, there's not a very clear relationship between producer prices and consumer prices historically. You've only seen a few instances where high producer prices really do trickle down to consumer prices. Usually they're absorbed in margins, and producer prices as well are almost entirely driven by commodity prices. And with commodity prices in some cases appearing to peak, we do think that producer prices as well, producer price inflation has likely peaked and likely come down. And the only time you really have seen it historically trickle down into consumer prices is when there's really strong consumer demand. At the moment, that's not the case. So we don't see it really going into consumer prices, and they've risen a bit, but we don't see much of a further rise in consumer prices that would force the PBOC to act in any way.